Good morning, good afternoon, and good evening. Welcome to a new video of PairTrade Finder PRO for the March 2022 edition. In this episode, we are analyzing the pair FGT, which are the tickets that belong to Ford and Goodyear, both in the automotive sector, of course. Important to highlight that in this occasion, we are analyzing this pair that belong to the Fast 50 February edition, and thus present a special characteristic that has been included in that set, where some specific pairs that, even if they don't meet our correlation and co-integration filters, still have an exceptional looking in backtest over the last 2 years. We call these wildcards, and we think that they deserve a further study of their signals. As we always do, this is our cheat sheet, and we are gonna go step by step analyzing each and every one of these boxes here to finally take a decision or not. So the whole idea is, even if the pair belongs to this category, we want to understand if this pair is worth to take or not, and even if we see that there is some specific parameters slightly weaker than our limits, it is important that we open our minds, because the final decision is always multifaceted and many-sided, and sometimes these kind of pairs are very worth to consider, even if some of the parameters, as already mentioned, do not comply with the strict limits. So first thing we always do is check news and observe, and we can observe in the program itself that the signal was triggered on the 7th of March, and this is the point where the signal was triggered with a standard deviation of 2.77, and that day, if we go to the news for the pair, what we observe in 4 around the 7th of March, if you read the different information in this news, what you can conclude is that even if there is some analysts that are beginning to say that maybe 4 is undervalued, that is not something that can drive an all of a sudden peak, because if you go to the Goodyear, there's nothing really relevant that can make us think that it could have a high impact on the price. We go back to the cheat sheet, we can say that this is clearly a green. In terms of earning dates and dividend dates, 4 was presenting results on the 26th of April. So if we go back here, from the 7th of March to 26th of April, there is more than 1 month space in order to take the signal without any problem. So that's good on that side. For Goodyear, earnings release is on the 28th of April. So in that sense, it's okay. Last dates for dividends for 4 were 28th of January, and for GT, 31st of January. So we can conclude that both earnings date and also dividend dates is clearly a green. Next parameter is pair momentum. Let's go back to our charts, and we are analyzing here that even if in the last 3 months, let's say that there is a little bit of trending here, for the rest of the year it was pretty stable, it was pretty horizontal. To me, this is also a green. But that's not all we want to see here. We go to each of the pairs, each of the values itself, each of the stocks. In the case of 4, on the 7th, the entry date, what we see is that it has been flat for the last couple of weeks, and then from that point on the 7th of March, the signal was triggered, but still around the 200 EMA, but well, in a situation where from a technical point of view it is not trending. Goodyear, on the other side, what we can see is that on the 7th of March, what we see in the chart is that we are far below or with a good deviation from the 200 media, and then from this point, taking into consideration that the pair, in terms of standard deviation, we have to buy Goodyear, this is a nice point to get in the pair. So this is basically what was provoking the standard deviation that we see in the charts. This is also clearly a green, and we're going to mark it that way. Standard deviation and percentage from mean. Going back to our charts, we see that in terms of standard deviation, the signal was triggered in a kind of resistance level. So this is exactly what we want to see. And also, in terms of percentage from mean, it is even more substantial, the deviation and the place where the signal was appeared, because it is even above what we can see here as a resistance level. So this is a nice point where we can think that the probabilities of reverting could be higher, as finally happened. So this is also a green. RSI, nothing very important to highlight here, apart from the fact that the RSI was above 80 or almost 80 points, which is considered as a very good RSI. Everything that is above 70 points is that is somehow overbought, and then it has to revert back to the media. RSI, then it's also a green. Correlation and co-integration. If we go back to our program, we see that co-integration is 0.66 and correlation is almost 64. This is what I was initially saying, that even this parameter is below our thresholds, which is 0.88. The fact that the correlation is almost okay, but more importantly, the compounded annual growth rate being almost 21 and the drawdown only 8.80%, it is somehow telling us that even if this is not good enough, these other parameters are so good that this is worth to be taken. More than that, the average net profit per trade is more than 400. There is 5 trades in 2 years for this pair, all of them successful, so 100% winning trades. And also very important, the average dates in trade for this pair, for the 5 instances that happened in these 2 years, is 10.6 days, which is pretty fast. And this is what we want to see, because The more that we have our capital running in different pairs, the better. And having this small number of days for the trade to be concluded is quite important. Keep in mind that normally a good winning pair takes around 14 to 15 days. So having here slightly more than 10 is very good. With that in mind, we are going to mark our co-integration in red because it's not within the limits. We're going to mark correlation in yellow because although it's not within limits, it's very, very near. And we are going to continue with volatility. So we go back to our tool and try to see volatility in this chart here, where the signal was triggered. Volatility was 3.9 something, 3.97. So it's pretty tight volatility. You can read here our limit is 4. So being so close to the limit, we're going to do two things. First, we're going to mark this in yellow, but also we're going to cut the size of the legs, and instead of going with 10,000 per leg, we're going to do it with 5,000 per leg. CAG and drawdown in backtest. We already saw this. Let me review it again. But almost 21 in CAG R and 9% in drawdown. This is very, very good relationship. And one of the reasons why we are so convinced of taking this risk. So this is clearly a green here. And then our final overview, we have 2 yellows and 1 red. So of course this is more or less in a situation where you have to choose and take the risk. But once again, the message we want to pass to you is that this is a decision that is fundamentally be taken by the fact that there are many factors involved. You have to keep them in mind in a parallel way. You have to consider them all together and then take a final decision. To me, this is a clear green, so I'm gonna mark it that way. Now, seeing this picture, once we have taken the decision that is pair is finally a go, let's see what was the results. What we can observe here is that in 9 days of trading, this pair took us $796, which if you put this in perspective and you consider that this pair here is being composed by legs of $5,000, because we are going in our trading in a leverage of 1 to 5. So for the pair that is composed of 2 legs of 5,000, 10,000, if the leverage is 1 to 5, we need 2,000 margin. And then that means that this is a 39.8 profit in just 9 days, which is huge. So this wildcard pair has proved that in occasions we need to have an open mind and think that these pairs can also provide us with a very good benefit curve. Okay, so with that, the only thing that remains on my side is wish you very good luck with your trading, and I'll see you in the next episode. Thanks so much.